investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the diamonds, which is the Dow Jones Industrial Average ETF. And as I usually do, I've left my lines on the chart from last week's forecast so you can see the pinpoint accuracy of the candle charts, and hopefully your confidence will go up after seeing the evidence. This is one of the most amazing markets I've had the opportunity of participating in over 3 decades. In 1982, I started trading the futures markets, mainly in the gold and silver pits in New York. And back then, all we had were point and figure charts because we didn't have computers and we had to rely on sharpened pencils and graph paper to draw our own charts. And the futures markets tend to be more technical than the equities markets, but as I'm seeing, the equities markets are following the charts almost perfectly. I don't believe there's anyone in the world right now that's holding a percentage of accuracy that's higher than what we have here at the Market Guys. And my goal is to show you how to read the charts for yourself using very, very basic bits of information, mainly price and volume. As you can see here, as I zoom into the charts, you'll see that last week, this was Friday right here, I said that we would most likely move down just a little bit to test that support level, which we did on Monday, and then I said most likely we would bounce. And we did bounce to fill that gap right there. Then on Thursday, which is yesterday, I'm recording this right now on Friday, so you could see that there was a bearish engulfing pattern. Bearish engulfing patterns basically show 80% chance that the markets will move down, and we have. The most important thing that you need to look at right now is that we've closed below that major support level, and there's a gap all the way down here right around 164 for the diamonds. That translates to be about 16,400 on the Dow, and so there's a very, very good chance that we're going to move lower from that point. So what I'm going to do is remove my lines right here, and I'm going to, again, put a forecast line for what I think is going to happen next week. And I think we can go a little bit lower Monday, Tuesday, before making a move to fill this gap. I'm not going to draw a forecast line up to that gap just yet, because if you look down below, you'll see that today we closed on higher volume. The higher volume indicates that the sellers are motivated at the end of this week. And with all the geopolitical news that's coming out, especially with Congress pushing through the year-end budget and, again, spending many, many hundreds of millions and billions of taxpayer dollars, investors are getting a little skittish right now with interest rates going up. I don't see a whole lot of new buying coming into the market. So when you throw that into the equation and then look at the technical charts, you can see why I'm more bearish than bullish at this particular point. If you are still not convinced of the accuracy of technical analysis, then you need to go back to last week's report. We have that on the website, and review what I put out and take notes. I mean, these markets went almost to the penny in every index that I spoke about. And I do believe that, once again, we're going to be accurate for next week. So pay close attention to what's going on here so you don't get hurt and you can protect your profits. Now, if we look at the Russell 2000, that's ticker symbol RUT. Again, I said that we would move down a little bit. That was that line right there to test support. We did that on Monday. We came right back down to fill that gap because I talked about that gap filling. Now that the gap is filled, there's an 80% chance that the market would have bounced, and it did. Go to my gap video on the Market Guys so you can see about gaps and the percentages and how they play out. We bounced, we went up, and then we tested a roll reversal line right here, came into resistance and pulled back. So now what I'm going to do is erase these lines, and I'm going to redraw what I think will happen next week. I think that this is the newest support level right here. I think that the Russell 2000 will go down to test that support level. So my target is going to be that line. I'm more bearish than bullish for the general markets, especially the Russell 2000. And then we'll have to see whether or not that support level holds. If support does not hold, then we could very well go down to test the secondary support level right around 1080 for the Russell 2000. Now, if we look at the spiders, that's ticker symbol SPY, that's the S&P 500 ETF. I said that we would bounce, again, just like the other markets I spoke about, and we went right to that support level. We bounced, we filled the gap. That horizontal line right there was my target from last week. We went right to the target, went a little bit higher, bearish engulfing pattern showed up, and then we gapped down. Now, let me just pause here for a moment and talk about that gap. I do believe that eventually that gap will fill. So the markets could very well go back up, but I don't think it's going to happen right away because, again, look down at the volume underneath here. Let me erase those lines. If you look, there's an increase in volume on a fairly significant red candle, and there's a gap below the market for the spiders. So I think what's going to happen is we're going to go down to fill that gap, or at least attempt to fill that gap. There's my projection for next week, and then we'll have to keep an eye on the volume. If the volume continues to go up while the market goes down, that's telling us that the sellers are still motivated and there's no need to get any kind of buy idea in your mind because that's putting the odds against you. The only time I would even consider buying in the S&P is after that gap fills, and then we'll have to start to see a drop in volume, which will tell us that the sellers are starting to slow down, at which time we would then focus on that gap filling. So stay tuned as we continue to project the markets for you and analyze the charts. Now finally, if we look at the Qs, this is the last index, and then I'll look at the VIX for you. We have the Qs again going right down to the penny, which was what I forecasted. We would test that support level. We went back up. We filled the gap just like the other three that I mentioned. And then we had the bearish engulfing pattern right here. Look at that volume and look at that candle. The Qs closed right on the low for the day. So that means we didn't run out of selling. We ran out of time. And if the markets were open a little bit longer, I would bet that the markets would break down below that support. So what I think we're going to do here is we're going to remove that trend line, remove this little leg here, and I'm going to project that the markets are going to break down and go below the support on an increase in volume. Now, a short while ago, I mentioned the VIX. That's the volatility index. It's a great leading indicator. My forecast for the VIX, again, was accurate. I said that we would pull back, we would test support. We did. We closed a little bit over that. But I do think that the VIX is going to start to move up just a little bit. And I'm going to remove those lines. I think the VIX is going to go up a little bit more to retest this resistance line, and then we'll have to reevaluate what the VIX is going to do after we hit that target level. Now, next Monday, we have an open house Q&A where for 1 hour, I'm going to give a live presentation analyzing the markets and your stocks. If you're interested in participating in that, just go to the Market Guys webpage, go to the front page, and there'll be a registration link there for you. And then you could register, save your seat, and then dial in on Monday at 8 p.m. I'm really looking forward to that one because there's a lot going on in the markets, and I want to do my very best to teach everyone how to read the charts to make as much as you possibly can in these markets with as little stress as possible. So have a great weekend, and we will speak with you on Monday. So long.
For almost 3 decades, A.J. Monty has motivated audiences worldwide about creating personal wealth and winning in business. His time-tested risk management strategies focus on ideas that involve a keep-it-super-simple approach, also known as the KISS principle. These concepts have been delivered to people in over 16 countries around the world, reaching audiences in the millions. AJ is a best-selling author of 2 books, The Market Guy's 5 Points for Trading Success and Take Charge of Your Money Now. both of which have been featured on PBS Television, Fox Business News, ABC TV, as well as Sirius Money Radio. As a financial educator and consultant, he has worked with some of the most recognized names in the financial industry. Companies like Bank of America, Charles Schwab, E-Trade Financial, Scotiabank, and TD Ameritrade's Thinkorswim. If you have ever been challenged with having to make a tough decision regarding when to buy or sell a stock, then help is on the way. The Options Oracle and Equity Oracle Alert services are designed to help you make those tough decisions. AJ will not only help you find the best trade candidates, but he will also lay out the exit strategy for each position in an easy-to-understand format that anyone can follow.
Hi, my name is AJ Monty, Chief Market Strategist for The Market Guys. For almost 30 years, I've traded stocks, options, futures, and even currencies. I've traveled the world teaching people just like you how to profit in the market using time-tested strategies that focus on risk management. You see, the secret to making money in the market depends on your ability to limit losses when you're wrong. In other words, if you want to make a lot of money in the market, don't lose a lot of money in the market. Now that may sound funny, but it's true. Most investors are challenged with two questions. The first question is, how do you find a good stock? Well, the best way to find the right stock starts with eliminating all of the stocks you would not invest in. This process of elimination is called stock screening. And our services help you overcome the odds so you're putting your money where the money is going. We're simply following the trends. The second question most people ask of me is, when is it time to sell? Well, if you don't have an answer to this question, then you might find yourself in a position where you're holding on to your stocks when things go against you. This is the worst thing you could possibly do because I believe this is no longer a buy and hold market. It has evolved into a buy and protect market. Holding on and hoping for things to get better is not a strategy. In fact, doing this will eventually lead you to a catastrophic loss, and you wouldn't want that. Our trade alert services help answer these two questions. Not only will I help you find the right trade candidate, but I'll also show you how to use the charts to manage risk. I don't use the charts to predict the future. I use them to protect the future. The charts tell me when it's time to get out as well as when it's time to get in. And that's what I'd like to teach you as well. We have two services, the Equity Oracle and the Options Oracle. The Equity Oracle is an alert service for traders who would like to trade only equities, whereas the Options Oracle is our premier alert service for both equity and option traders. Each alert is laid out in an easy-to-understand format that shows charts depicting entry and exit points. Risk management is our cornerstone of each service, so you don't have to struggle with the decision of when to get out or when a trade goes against you, when should I take my loss. The strategy is to use the KISS principle, keeping it super simple. As a bonus, you'll have access to a live Q&A session as well, each and every month. This is where you can submit a stock symbol, and I will analyze these stocks while we discuss the best trading strategies for each position. And it gets better. In addition to the alert service and the live monthly Q&A sessions, we're also developing a member page that will include instructional videos about how to get the most out of our service. Without question, this is the best trade alert service available on the market, and we look forward to having you as our newest subscriber. Simply click on the link below to subscribe. It's easy. Once again, I'm AJ Monty, Chief Market Strategist for The Market Guys. Thanks for watching.
Enrolling in the service is easy. Simply click on the link below to subscribe, and your weekly alert will be delivered right to your email box. And if you act now, we will include AJ's best-selling book, The Market Guy's 5 Points for Trading Success. This is a first-time offer that will get you on the road to success and keep you there. Remember, if you continue to do what you've always done, things will never change. Positive results will only come after you have taken the first step in the right direction. We look forward to having you as our newest member.